G'day everyone, welcome back to Pete's Investing. This is April 1, 2023. This is not an April Fool's joke, but this is the nat gas price update. So we're looking at here the daily, the 4 hourly and the hourly. If you're new to the channel, I'll just give you a quick recap of where we are. We look at the CCI moving average, which is the CCI 1500 and the moving average 400. And if that's in a decline, we take only short positions. Or if it's in an uptrend, like it is back here, we take only long positions, and we only trade based on the daily. We trade the lower time frame, so you can trade the 4 hourly or the hourly, depending on your preference, or you may even trade lower time frames if that's your preference. So you can see here on the daily, we're still in a pretty strong decline, and we may see that's a bit of a convergence happening between the CCI and the moving average. On the hourly chart as well, we're also in decline, in a bearish outlook. We've made some minor adjustments to the upside overnight. Whereas on the 4 hour chart, there's been a bit of a divergence, and I'll cover all these respectively in a minute. So let's go to the daily first. So again, just to recap the way we trade this, we trade only long positions when the CCI is above the moving average, and when the CCI is tracking in an upward motion like it is back there, up there, there, and we avoid going long when the CCI is dropping like it is there, for example. That's just a very quick recap, and there's trading strategies in the description below to follow any of those trading strategies and reference some of my playlists on strategies as well. So where are we today with the price? Okay, overnight the price has jumped slightly, and I say very slightly, compared to what it's been doing recently. So we're still in this, trapped in this, well, it's actually almost broken to the upside very slightly above this descending diagonal trend line, and I've got an ascending diagonal trend line at the bottom here, and that goes back as far as 2020 in those lows. So that you can see there the wedge that was forming in the past few weeks. So what it's done, and again I've drawn a Fibonacci retracement on that recent spike in March this year, or early last month, and I've drawn a Fibonacci retracement there. So you can see there, for us to be more confident, we want to see it break above this resistance line, and that happens to be the 61% level, which happens to be also a key Fibonacci retracement. If it breaks above that typically, then the trend generally fails, and it starts trending in the opposite direction. So anything below that potentially can be still in a continuation of a bearish outlook. So we want to see it ultimately break above that resistance level. If it breaks below this support line, this ascending diagonal line, if it breaks much further below that, then we're going to see further downside, and I'll explain that in the 4 hour chart. So looking at the 4 hour chart, first thing to notice is there's a divergence here on the, there's a divergence there happening on the CCI versus the price. There's a bullish divergence on the CCI versus a bearish divergence on the price chart. So that's some glimmer of hope, potentially where we might be bouncing off and heading further north. But again, very, very early stages, so I wouldn't get too confident and too cocky about it yet. But to understand where it might be going, I've drawn here a Elliott wave count to the downside. So again, just 1, 2, and a third wave down, and then a very minor fourth wave up. Now, as I say always in my videos, for the fourth wave to be valid, more valid I should say, it needs to go as high as almost the 30 to 40%, which happens to be around that area. This has barely touched the 23% retracement on that third wave, so not a very strong fourth wave up before it went further down. Now that fifth wave, if that is a valid 5-way count, it's still got some way to go before it finishes the fifth wave potentially. So that's where we are with the 4 hour chart. On the hourly chart, as we said, it's still in a decline, although it's making some retracement, and potentially in the coming hours, it may break, if this continues up, it may break this moving average on the CCI. Now what you'll notice here as well is that peak there is, I've drawn on the daily, that coincides with the daily, and that coincides with around a 61% Fibonacci retracement. Just to highlight that again, go back to this daily chart. That's that area there. So that between that high and that low, the Fibonacci retracement is around a 61% level we want to get to be more confident of going bullish. You can see there that also aligns with this key resistance area. So it needs to break above that to be more confident about bullish trades. But on the hourly chart, I've drawn this other Fibonacci retracement between that low and that recent high, and that was a recent high because it broke higher highs compared to the previous highs, and that is now our new range. So you can see there it's bounced off the 23% to the downside overnight. Now again, that may continue to the downside, in which case it will continue our fifth wave down on the 4-hour time frame we saw. However, if it keeps breaking up, and if that reverses and breaks up again, we need to see a break confidently above the 61% on the hourly chart, and then ultimately break higher than that 100% retracement level on the daily. But in the short term, our first level of resistance will be this 23%, and then the 38%, and we want to obviously see it break above the 61% in this area to be more confident about going bullish. And by that stage, you'll see the hourly CCI as well break to the upside if it does get to those levels. So overall, I wouldn't be placing any long trades yet until we see at least the hourly break to the upside on the CCI, and more confidently, we want to see it, the moving average on the daily break to the upside as well. But ultimately, we want to see it break above that key resistance on the daily chart. Again, to understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and support us. Links with the Patreon page also attached. And we'll speak to you in the next update.